Hi there, Nicholas Cameron here from First Formations, and welcome to another episode of Whiteboard Thursday, where we provide advice on a wide range of business and company matters. If you find this video useful and you enjoy it, please give us a like and share it with your friends and colleagues. But for now, let's get started. Today I want to discuss how to reduce your corporation tax bill. There are various ways to do this, and they generally come in the form of reliefs and allowable expenses, collectively known as tax deductions. Many businesses pay too much tax every year simply because they do not claim justifiable tax deductions. This problem is more pronounced in small businesses where some owners may prefer to handle their own tax affairs and not engage in the services of a professional accountant. In this video, we consider 10 methods of reducing a limited company's corporation tax bill by applying legitimate tax deductions, several of which you may not be claiming. Before we go any further, let's consider the rules of engagement, or perhaps the ground rules is a more suitable term here, although many see not paying too much tax as a challenge of the highest order, which requires a combative attitude. Also, let's not forget, when it comes to tax deductibles, if you don't claim them, you will end up paying unnecessary tax. So take a moment to consider the following rules that will stand you in good stead. Claim everything you are allowed. Do not claim anything you shouldn't. Keep records of all costs and expenses, no matter how small they are. Become an expert in legitimate tax deductions and allowable expenses, or hire an expert. And perhaps, most importantly, get organized. When it comes to expenses, the general principle is that an item of expense is tax deductible when incurred wholly, exclusively, and necessarily for business purposes. Expenses incurred for personal use are not allowable. If an item of expense is a mix of business and personal use, it may be possible to apportion part of it as tax deductible. However, this is dependent on the item. So without further ado, let's find out how to slash that corporation tax bill. Starting with number 1, expenses. There are a wide range of allowable expenses which may be claimed. Starting off with the better known ones, we have the premise costs, so for example, rent and utility bills, staff costs, salaries, bank loan interest, the cost of stock or raw materials, office costs, stationery and so forth, travel and accommodation costs for business trips, professional fees such as accountancy and legal, advertising and marketing costs, and insurance payments and childcare. Then we have the lesser known expenses, many of which are simply not being claimed by businesses. And these include things like the cost of setting up your limited company, the Christmas party, bad debts, that is when invoices are not being paid, broadband, mobile telephones, bicycle mileage, the cost of parking, books and magazines, business gifts, donations to charity, eye tests, flights, memberships and subscriptions, and training courses. It is worth remembering there are different taxation and reporting rules depending on the type of expense. A full list of expenses and benefits, along with the relevant tax rules and rates, can be viewed at the gov.uk website as an A to Z list. So number 2 is capital allowances. These allowances can be claimed when a company purchases assets which are required for business use, in particular plant and machinery, that is, machines and equipment required for the business, as well as business vehicles, including cars, vans, and lorries. Once the value of the items has been calculated, this can be deducted from the profits before tax, or before tax is worked out on the difference. As well as plant and machinery, capital allowances can also be claimed for renovating business premises in disadvantaged areas of the UK, extracting minerals and dredging, research and development, or more commonly known as R&D, patents and know-how, so that is intellectual property regarding industrial techniques, and structure and buildings. The full value of an asset which qualifies for the annual investment allowance can be deducted from profits before tax. This applies to most plant and machinery, but not cars up to the relevant maximum amount, which is currently £1 million. In addition to the annual investment allowance, the full cost of assets which qualify for first-year allowances. For example, some cars with low CO2 emissions can also be deducted. Number 3, trading losses can be used to claim a relief for the purposes of calculating corporation tax. This relief is obtained by offsetting the losses against other business gains or profits in the same accounting period. To calculate a trading loss, capital allowances, which increase the loss, and balancing charges, which reduce the loss, should be included. Losses or gains which might be made on the sale or disposal of assets should not be included. Number 4, research and development relief. R&D relief is designed to help companies working on innovative projects in the field of science and technology. Companies must be working on a specific project to obtain R&D relief, and they must explain how a project has sought to advance science and technology, how the project has had to try and overcome uncertainty, and why the solution to the problem cannot easily be worked out by a relevant professional. There are different types of R&D relief available. Small and medium-sized enterprises, so those with fewer than 500 staff members, and with a turnover of under 100 million euros or a balance sheet total under 86 million euros, can claim SME R&D relief. This enables eligible companies to deduct an extra 130% of their qualifying costs from their yearly profits, in addition to the normal 100%, totaling a 230% deduction, and claim a tax credit if the company is loss-making, worth up to 14.5% of the surrendable loss. Large companies working on R&D projects or companies who have been subcontracted to do R&D work by large companies can claim a research and development expenditure credit. This is essentially a tax credited calculated at 12% of the company's qualifying R&D expenditure. Please note, R&D relief is not available in respect of research or advances within the social sciences spheres, so such as economics, or which relates to the theoretical field, so for example, pure mathematics. Number 5 is the patent box. This is a scheme which enables companies to apply a lower rate of corporation tax to profits earned from any of their patented inventions. Qualifying companies which successfully elect into the patent box can essentially reduce their corporation tax from the standard rate, which is currently at 19%, all the way down to 10%. Number 6 is the employment allowance. This is a scheme which allows certain limited companies to reduce their annual national insurance contributions, or NICs, by up to £4,000 each tax year. It is available to employers whose Class 1 national insurance liabilities were less than £100,000 in the previous tax year. Although please note here that the employment allowance cannot be claimed by sole directors. Number 7, business rates. These are essentially like a tax, like council tax, payable by business which use non-domestic properties, so for example shops, offices and pubs and so forth. These are generally considered a tax-deductible expense. Furthermore, many businesses can obtain business rate relief, which is a deduction on the standard rate. Number 8, creative industry reliefs. These consist of 8 different types of corporation tax reliefs, which allow qualifying companies to increase their amount of allowable expenditure, ultimately reducing their overall corporation tax bill. Creative industry tax reliefs can be claimed by companies which make a profit from films, high-end television, children's television, animation television, video games, theatrical productions, orchestral concerts, museum or gallery exhibitions, and so forth. The company applying for these reliefs must have responsibility throughout development, from the start of pre-production until the completion of the film, program, or video game. Or, in respect to theatrical productions, orchestral concerts, or exhibitions, they must be responsible for producing, running, and closing the production. The types of creative industry reliefs that are available are film tax relief, animation tax relief, high-end television tax relief, video games tax relief, children's television tax relief, theatre tax relief, orchestra tax relief, and museums and galleries exhibition tax relief. To qualify for creative industry tax reliefs, all films, animation and television programs or video games must be certified as British, or they must pass a cultural test or qualify through an internationally agreed co-production treaty. This process is managed by the British Film Institute on behalf of the Department of Digital, Culture, Media and Sport. Number 9 is goodwill and relevant assets. Corporation tax relief is available on certain intangible assets such as intellectual property and goodwill, for example, business reputation. Relief on goodwill and relevant assets is at a fixed rate of 6.5% on the lower of the cost of the relevant asset or 6 times the cost of the qualifying IP assets the business has purchased. For a full explanation of relevant intangible assets, see the HMRC Corporate Intangibles Research and Development Manual. And finally, number 10, working from home. Now, although this was sort of covered under the earlier heading of expenses, it is worth mentioning in light of the rising number of people working from home. If the home is being used for business purposes, all limited companies can claim a percentage of household costs and utility bills as allowable business expenses. This can be claimed by taking advantage of HMRC's flat rate of £6 per week tax relief in respect to home working, or working out the exact amount by calculating the proportion of household costs that are being incurred for work purposes. Please note the latter option, you will need to keep full records of the costs, including receipts, bills, or contracts for this. So there you have it. Today we have discussed how to cut your corporation tax bill. All tax rates and allowances quoted in this video are current for the year 2021 to 2022 tax year. Any changes to these rates will be available on our blog, 10 ways to reduce your corporation tax bill, the link of which is listed below. If you have any questions, please leave them in the comments section below. In the meantime, be sure to subscribe to our channel to get more advice on limited companies, reporting requirements, and tax obligations. We're always happy to hear from you, and we cannot wait to help. Until next time, cheerio.